All right, hey gang, Nate Bear here, lead technical tactician for Monument Traders Alliance and Trade of the Day. And in today's video, I wanted to go over a chart in ON on semiconductor. We've been talking about this one in Daily Profits Live this morning, and one of the members brought up a great question: is when do you use earnings as a catalyst? When do you use earnings as a date that you want to include in your options plays versus a date that you want to exclude in your options plays? I think that is a great question. And for me, if I have a setup, this is the one we're going to be talking about, but if I have a setup and I have an earnings date, that is an opportunity for me to buy calls that expire that week because the premium will stay in the options. If I am a seller of calls, if I'm buying like a spread or selling a spread, then I want to do it the week before that earnings date because then the premium will come out of the options as we go towards the expiration date. But when you have an earnings date, the options that expire that week, they maintain the premium because there is a known volatility event. So if we look at the options chain, let me reduce the number of strikes here. So we know that in ON, the earnings are on Wednesday, April 26th. So if we minimize this, we can look right in through here at the implied volatility, and you can see this week is the earnings series, April 28th. So what I can do then is say, okay, well, if I want to sell a spread, I can do it either next week or the week after, April 21st or the 14th. But if I want to buy calls, I'm actually going to come out and I'm going to buy calls that expire during the earnings series, right? And just to confirm, earnings right here, Wednesday, April 26th. So the earnings, so the options expiration series that includes that is April 28th. So if I were going to buy calls in ON, which I may do today, I'm going to be looking at these like $80 calls right here in ON. And let's review the chart. So again, here we have a very strong stock, right? Clearly, this thing is trending, right? This thing is very near all-time highs. It looks really good, really solid. And then within that, we've got this beautiful move higher, followed by this sort of flat top, rising, higher low situation. And price is right here at the 21 EMA. So this is a setup that I really, really like. We sold a spread on this, or I'm working in order to sell a spread on this as well, to put credit spread. But I also think this is a great time to come in here and pick up some calls in ON on semiconductor. And I would probably start with half size here at the 21 EMA. I would leave room to add right down here at the 55 EMA. And then I would probably use a daily close under that 55 EMA as my stop and target a move back up into these old highs around $85, $86, $87. All right, so that's kind of what I'm looking at. The other thing I want to show you is in the SPX. I want to take a real quick look at this weekly squeeze. This is one thing that we are tracking in Daily Profits Live. So I am bullish until further notice with this daily squeeze. However, I am looking for a pullback to the 21 EMA or so, maybe around 4,000, in order to get long again in a bunch of names for this continued move higher based on this weekly squeeze in the SPX. All right, so that's what I've got. I hope it helps. Any comments, questions, whatever, leave them below the video and I will get back to you. All right, thanks, gang.